Hello everyone and welcome to the HFX trading course video number 8. So today we're going to be talking about trading psychology, and I'm just going to mention some key aspects, some really hard things that you have to deal with in trading. So the first thing that I want to just talk about is FOMO. And I think the reason I want to talk about FOMO first is because I want to get something very clear that I really strongly believe about FOMO. Is I believe that I think the way that you come into the market and the way that you handle yourself coming into beginning your forex journey, or coming into how you're going to start learning, or how you want to start putting some money down. I think people get FOMO based on how they start. So what I mean by that is, if you come into the market and you've got a mentality that you want to make tons of money, and you want to come here and you want to bet high amounts, you want to start off with something really high. I'm afraid I just think a hard truth is that you're probably gonna lose that money. um, that's just my opinion. If you disagree with me, I mean, the facts speak for themselves. Okay, there's a well-known fact in the industry that 90% of traders lose 90% of their money within 90 days. Okay, so if you look at that fact, how do we categorize what the 90% are doing? Well, we know that they're going to be over risking, so they're going to be risking high proportions of their account. They're not going to have any strict risk management in place, which is another video that I'm going to be talking about. They haven't got that, they overtrade, so they're constantly looking to take trades. I mean, I heard one guy come to me and say he takes 20 trades a day. I mean, I don't know how you can physically take 20 trades a day, but there you go. Them sort of numbers, amount of trades, I'm gonna, I mean, well, I don't know. Uh, you know, if you think you're gonna come out in blue taking that many trades, good luck. Yeah, I'm just gonna say good luck. Um, but yeah, I'm gonna think, and then once you start thinking about what the 90% are doing, now you can start thinking, well, what do the 10% do? Well, I know the 10% are gonna have a trading plan that they've back tested, and they have put the time and effort into developing for themselves. I know that I'll have a strict risk management plan in place. Okay, and I know that they don't overtrade. Well, most don't overtrade. You might get the odd one that does and gets away with it, but I don't know. Uh, you know, Rule of thumb, really, not too much overtrade. Otherwise, they probably would probably just end up in the minus at the time, so it wouldn't be really part of the 10%. So yeah, no, I think overtrade. Yeah, no overtrading. So they're things that we're going to talk about in terms of risk and psychology. So yeah, as I was saying about means to go on. So when you first start your trading journey, you need to understand that in any aspect, career, of skill that you do, you will start from the bottom. Okay, you have to start from the bottom. The problem is that, yeah, you can't really have a natural talent for trading. I think you can have natural talents for aspects that are factors of trading. So me personally, I'm a very patient person. So I can sit here for a long time if I need to and wait for something that I want. Okay, that's something that helps me. It's kind of something that's I've had to adapt to, because when I first started, I got the thing we're going to talk about, FOMO. I got impatient. So this is actually something that I have adapted, and I think that trading brings out, when you first start, these human emotions. Okay, and just take it from me, just a bit of background about myself. Okay, I've got 4 years in economics. I've studied economics for 4 years, and I studied psychology for 2 years, so I know a thing or two about human behavior. And the problem is that everybody, when they first come into trading, they think it's like gambling. Okay. Now, what's the thing about gambling? Gambling is a human emotion. Okay, and gambling brings out human emotions. Okay, because what is gambling is more to do with greed. Because gambling is all about you're trying your luck, and you know that there's a possibility of you losing that money, but you're trying to make more with it without having to really work for it. Okay, so um, it's all based on odds and things like that. But the point is that it's a bad mentality. Gambling is, let's say people with gambling addictions, that's all really bad and stuff, right? So the point I'm trying to make is the fact that when you come to the charts, if you have a ideology that this is for this is some form of gambling, yeah, then you will 100% lose money. Okay, because then you'll treat it like you're down at the casino, or you're down at the pub on the roulette wheel. Okay, you're gonna blow your money. All right, so that's one way. So if you come in like that, you're gonna lose money, and you're gonna have wasted time that you could have started to learn from the bottom, put the hours in, like anything you need to do. Like if you're taking any course, any degree, anything, any exam, you learn from day one the content. You don't know nothing about that particular subject. Okay, you need to start from the bottom. That's really important. So if you come into this with a mentality of you're expecting to, come here and double your money within a day, forget it. All right, that you're just, you might get lucky. There's always ones that get lucky, but then this is where greed will take over, because now you're in a mentality that you think that that's going to last. Okay, and then what happens is that money just goes down the chute, and you're going to blow that account, because you didn't even know why you did it in the first place. So there's no chance that you're going to continue to do that long term. All right, but here's the thing, right, about the market. You want to know about market psychology? The market doesn't care where you're from, who you are. Okay, the market will do what the market's going to do. You cannot control what's going to happen in the market. All right, so if you cannot control what's going to happen in the market, you need to start thinking, well, I can't control it. Okay, so now I need to do something based on what I see, and then I can start basing on, well, how often do I see it? And then you can start saying, well, I'm going to test how often I see this. And then you can base on a probable rate of how often this is going to happen. And now you have yourself a trading plan. Now you need to go to yourself and say, well, what's my risk management? But I'm going to not dabble too much into that. I want to focus more on trading. Talking about FOMO. So when you come into that with that gambling poor mentality coming to the start, the reason why you're going to get FOMO more likely, in my opinion, is because you're trying to get there quick. So when you start seeing price move really fast, or you really think price is going to go up, you're gonna get in that trade, and that's why if you get FOMO at the start, you're going to find it a lot harder when it comes later on down the line, when you're going to want to be consistent. You're going to want to get in again, because now you think you're better. So now you're going to let a bit of ego get involved, and your ego is going to say, well, you found this, and this, and now you want to get in all the time, and then you're going to overtrade, and then you're just going to find it a lot harder. So I think, getting to the point, you need to start trading like any other career, any other skill, and you need to start from the bottom, and you need to understand that trading is about what you see. Trading is about, detaching yourself from the losses, detaching yourself from the money aspect, okay, which is what I'm going to talk about as well. And you need to just understand that you need to treat it as a skill, right? Okay, when you go to work, and if that's your skill, right, you don't see every hour, oh, I just made 100. Oh, I just made 50. You don't look at that every time you check your bank account. Okay. You're not focused on that. You just go to work, you do the shift and you go home and you know what you're getting at the end of the month, right? That's how you need to treat this. You turn up to the charts, you look for what you want to see, you take the trade, you manage the trade, and you call it a day and you go to the next session. And then you can say at the end of the month, oh, I earned this. Okay. That's how you're going to want to treat it, because then you're going to start looking at it. Okay. If if uh I'm not going to if I'm not getting FOMO, right, and I'm strict with myself, right, and I'm trading my plan, right, and I'm not over risking, then you're going to see results. Okay. And the fact is that you need to treat it like the skill. And then you know that, because part of your training, let's say for your skill, is learning the psychology and learning to detach yourself. So then once you learn to detach yourself, then you need to just start focusing on the charts and focusing on learning, right? Not worrying about trying to make money. Okay, that comes later. Just like anything in life, the money and the success always comes after the hard work. All right. This is the thing. This is what I was talking about earlier. Is Forex has been brandished as an industry to get rich. Okay. Any industry you can get rich. Okay. If I wanted to go start a clothing brand, right, I could get rich doing clothing. If I wanted to, I don't know, start my own car sales, I don't know, car retailers or whatever, car dealership. I wanted to make money that way and become wealthy that way. I'd have to do it. And with any business that you start, right, you got to start off by handing out leaflets, learning a trade, getting to know, all them type of things. It's the same with trading. You got to learn from the bottom. You got to start learning about bullish, bearish, breaking of structure, market structure. Now you're learning, now you're seeing, and you're developing over time. You don't need to put money down, because you're not going to make any money. It's very hardly unlikely you're going to make any money. You're actually just going to lose. So why are you doing it? Why? Because human emotion, human behavior. Okay. This is why, right? You have to understand. If you understand why you're doing it, then maybe you can start realizing how to avoid it. Okay. And that's what I want to talk about in terms of why psychology helped me to understand that, because I understand about human behavior, and human behavior would say that we as humans, we act rationally, right? We observe, we observe other people, we see other people making money during Forex, so we come here thinking we can do the same. That's human behavior. That's we're almost being conditioned that Forex is this come here and we'll change your life, we'll make your life this. No, I'll tell you how it's going to change your life. You're going to be poorer than you did coming into it if you don't treat it like something that's a career or a skill. Okay, because if you truly want financial freedom, you'd be willing to do whatever it takes to get there. And believe me, if I talk you through my own journey, I would say that Forex has put me through real blood, sweat, and tears to get to where I am. Okay. It took many, many failed attempts, and I wish that I had started off better. I got a good start, I think, in my opinion. Maybe I started a bit too early with a bit of money to read at the very beginning. And then when I sat back and realized I need to forget the money, I need to start from the very bottom. That's when I started learning at a fast rate, and I was getting there very quick. And I'm a fast learner, and I focused on that so much that it became my sole priority, and I started seeing a difference in my trading. All right. So if I'm one of the 10%, you're hearing it from me. That's how I done it. Okay. You need to interpret, is that something you think is likely to, help you in your journey? That's what you need to work out. Okay. If it's something that's not going to benefit you, then if you don't feel that you agree or whatever, then fine. That's up to you. But obviously, at the end of the day, it's about what works, and this is all worked for me. Treating forex like a skill, trying to master it, because my motivation was to master it so that I could be. And in the UK, right, there's all these people saying that they're 20-year-old this, 20-year-old that, with all these cars and da da da. My motivation was actually to say, well, I actually am a 20-year-old trader who makes X amount, and I can prove it. I can show you my losses. I can show you my wins. I can show you my lot sizes. I have nothing to hide, right? Compared to demo profits, a fake Rolex, and a rented Lamborghini. All right, and that's what you have to realize. About forex, you need to treat it like a skill. So I'm gonna move on and not babble on too much. I know I have a tendency of doing that, but I want to make that point very clear because it is so important. All right, if you get it right from the start, you're gonna see it's gonna be a whole lot better for you. And I think you're more likely to be better because you're gonna start. You've appreciated it from day one, and you're always looking to improve and adapt and learn. And I think that's the other thing. You need to constantly want to be better. You should never be a point where you're like, okay, now I'm good enough. Okay, market's always going to be different. You need to adapt to different market environments. Okay, it's a constant learning process. But that's what I love about it. So FOMO. So leading on more from FOMO, what it is. So FOMO is obviously the fear of missing out. So I was talking about FOMO when you first come into the market. Now let's talk about FOMO when you're trading. You're with your pals, right? And your pal James is getting in a buy because he thinks price is going up. Now you don't want to, not literally, you don't want to miss out socially, but it's the aspect of other people getting buys, maybe not other people getting in buys, but maybe price moving really fast. But also, if you're trading around other people, you're watching live streams, right? People watch the live streams. So you're going on the live stream and you see someone's taking a buy and you're like, oh no, I've got to get in. Okay. And that person has a really strict risk management. So they know that if the next 15-minute candle comes down and breaks the low, they're going to start closing positions off. But no, because you took that buy, and you don't even know why you took that buy, because you didn't want to miss out on making money. So there's the money aspect coming into trading. So you're not focusing on what you're doing. You're copying someone else. You're focusing on what someone else is doing. You're focusing, and then if you're not watching what someone else is doing and you're seeing price move really fast and you don't want to miss out on that trade, even though maybe you've took 2 losses already, right? Now you need to think, I'm thinking of the money if I take this trade, because if you take this trade, you are not focusing on your improvement of being a trader. You're trying to make money, and it's just going to come back and bite you in the face, because you're probably more likely going to take that for a loss, and you're just going to have a crap day. So that's the other thing, is a lot of people quit early in Forex. Why? Because they don't come in to start off very well. They come in with thinking that they're going to come in and start making money. So that's why a lot of people drop out. And yeah, and FOMO, that's why people are getting FOMO, is because you're constantly worrying about the money. You're currently worrying about the dollar figure. You're constantly thinking, can I make money? I honest to God, the thrill I get when I'm in profit is amazing. Okay. And that's a really positive emotion that you're allowed to have. The difference is that I know when I'm in profit, I know where I'm securing. Okay. So it doesn't matter the number of figure. It's just more that I won, and that I made money. Feels good, but that's fine because I have a strict plan in place. I have I've back tested. I have strict risk management. I manage my trade. And when I can secure, I get those good positive emotions out of trading. Okay. And then that's how I battled, which is what I'm going to talk about next, is taking losses, is because I worked on my psychology around my losses, because I knew I got a really good excitement, a really good feeling out of taking a win. Okay. But then where the bad psychology comes from and stems from is when you're taking losses. Okay. And your wins are going to feel good, but they're not going to feel great when you're losing more. Okay. So when you're losing more, you're going to feel really bad and you're going to have a bad day. You're going to beat yourself up. You're going to be moody with everyone else around you. And you need to understand that's because you're focusing on the money, in terms of the fact that you're over trading, over risking. So these are all factors of money. Okay. So my factor of money isn't the same, because I executed on what I saw. Okay. I managed the trade and I done everything that I planned to do. So I didn't focus on the money. I focused on doing what I've trained myself to do on the charts. Every time I just press the buy, I place my stop, right? That's it. Okay. When my price hits my take profit level, I feel good because I have executed and I have, it's planned out. All right. It's like when you, I don't know, you're cooking dinner and you want the chicken to be really juicy, and the chicken comes out really juicy. All right. So you put it in for the correct amount of minutes, that to get the maximum amount of, you know, whatever you call it, saturation. And then at that point you've done the correct temperature, you've done the correct time. So now it's just down to 9 out of 10 times it's going to be nice and juicy. All right. So it's the same with trading. You just need to uh, follow the plan and just execute. All right. So the reason people lose is because they focus on the money. So every aspect of negative emotions in trading, aka FOMO, is because you're fear of missing out on the money. Over trading, right? You want to make back your losses, so you're trying to make money, right? You don't want to be in a loss. Over trading because you've won 2 wins and now you want to make even more money, so you're focusing on the money. Next thing, right? Your losses comes from the fact that if you didn't execute and follow your plan, how much worse are you going to feel, right? So there's all these emotions, right? Negative, based on the fact that because you're worried about making money. So you're not focusing on what's happening at hand. You're more worried about trying to make a few quid, right? So I'm going to talk about when you take losses. Okay, so when you take losses, you're going to get very negative emotions running through yourself to begin with. All right. Now, there's a few ways I've heard people say to deal with losses. So they say to treat it as business expense, and to treat it as just part of your part of the process, as some people say, which is all true. Don't disagree. But I think what helped me to deal with the losses was once I had properly, like I say, back tested, and when I'd properly traded live for a while, took in a few losses, I started to realize, once I got consistent, that losses were just um losses were just the probability. Okay. So what I mean by this, if I know that my average win rate per week, say, is 70-80%, just for example, I know then that the 2 or 3 trades that I lose, let's say on average, out of 10, are going to be a loss. Okay. Now that becomes a problem. So now that I accept that I know I'm going to lose, so I know before I'm taking this buy or sell or whatever, that I'm going to lose. Okay. There's a chance I'm going to lose, but there's a very low chance. Okay. But at the same time, I know that I have an 8 out of 10 chance of winning. So you're going to execute because the probability is in your favor. So if you do lose that, what does that mean? Well, the next time you come and do the same exact thing, it's still at 80%. So now you're like, okay, so if it's at 8%, if I keep taking it, say, over 10 times, now I'm going to start seeing my money compared to worrying about what happens in the one time. So if you see it like that, that's, say, taking one trade per session, which I think is what you should be doing per the trading session you take, aka, right? So if you see it like that, then you're gonna less likely overtrade, right? Because you're trying to say, as soon as I take 3 trades in one session, I'm giving the same idea 3 chances. Whereas I know that because I've back tested, we get this same move, say 8 times in a week or 6 times in a week, whatever. Chances are maybe I have 1 or 2 losses and the rest wins. So you're going to want to see that consistency, but you're not going to see that consistency, right? Oh, pardon me. You're not going to see that consistency if you're over trading. Okay, which brings me on to why losses, you're going to feel worse, is because, say, you take a buy and you lose that buy, and then you see price going back up to your entry and you want to get in again because now you're getting the FOMO. You don't want to miss out. You want to make back the money, right? You're going to then over trade, and then you're just going in that constant decline, and you're making the same mistakes and you're beating yourself up, and you're thinking about the money. So if I took that loss, right, this is how I deal with taking losses. One thing, first of all, I acknowledge that is part of the probability. And I acknowledge that I'm actually happy because I managed the trade and I didn't lose as much as I set out to lose. So I knew I was losing, say, £100, and I only lost £40, which is, say, an example, over the last couple of weeks. I'm going to go away knowing I saved £60. So when I now go and take 10 pips profit, now I know I'm back into profit. Okay. So that's part of taking a loss. You have to accept it. But if I took that minus £40 loss and then I see price going back up again and I'm like, I need to get in another buy, and I get in another buy, right? Ooh, sorry. And then at that point, again, another buy, and then I get stopped out again. And then, I don't know, you look for another trade idea because you want to make back the 2 losses, because now you think, well, I've now taken 2 losses in the same idea. I'll be a bit more patient. And then you see, you get another trade idea in your head, and then you want to take that trade idea. And then what's going to happen is you're going to then start over trading. And then the losses are just going to feel worse. And now this is why you're not going to win overall. It's why you're not going to be consistent. It's because now you've got to win 4 times to make back that loss. Whereas the way I trade, I'll come back next session, 1 trade, and I'm back in profit. Okay. So how do we try and avoid all of this, or not avoid, but how do we try and get through this quicker? Because I think part of training is maybe going through it at some stage. I mean, I don't know anyone that's come and said to me they haven't got it. I know I have, so I'm definitely not one to talk, but I'm one to say how I got out of it. And that's the main thing, because I found a way out and I found a way of getting consistent. And this is what I found. So I found that the reason I wasn't winning was because I didn't properly back test. Okay, so I went back to the drawing board and I focused on the charts. I focused, I didn't once I got onto the simulators, it was not real money. So I wasn't getting any real emotions, but what I was getting was the satisfaction out of getting things right. Okay, because now I can see improvements in my trading ability. So that was a good starting point, positive to take on to the live. Okay, so that's another thing that I would take note of. So I realized I hadn't properly back tested. So after properly back testing, I realized that I was getting, I wasn't looking at key areas, etc., etc. And then once I started over analyzing for longer periods of time, I started getting better, and I started reducing my losses in that sense, because my actual trading and the way I look at things was getting better, and plus just more experience looking at different scenarios, breaking it down the same way really helps. Second of all, was then developing my trading plan, and having obviously what's called strict risk management, which I'm only going to touch on a little bit. I want to actually have a proper video about it, really go into depth. Same with the trading plan, and same with backtesting. So believe me, we've got plenty of detail to go into. So this is more about how to deal with psychology, which obviously I've mentioned, but how to cut out the FOMO, in my opinion, is probably backtesting, having a trading plan, and having a strict risk management. If you've got all three of those, then if you're still getting FOMO at that point, then I just don't think trading, I mean, I don't want to be harsh, but I think you're just going to really struggle. I don't think it's for you unless you can work a way out of you getting out of it. Because at the end of the day, I say it in a way because, okay, I don't want people to lose money, trying to, it's like a failed investment and you keep pumping in money into it. Sometimes you have to just admit when something's just not working. And at the end of the day, if you've got all of this, and you're still losing, you're still struggling, then yeah, it's down to just you getting the FOMO, doing the over trading, over risking. If you have properly back tested, you have a trading plan, and you've got a strict risk management strategy, right? But if you're not implementing it, then what can I do? I think another thing is as well is, in terms of the risk management, I think you need to be very detailed about how you need to go about that. So just in terms of psychology, you need to have a specific amount of, say, risk that you want to risk. So AKA 1 to 2%. Do you want to risk 3%, etc.? I don't think you should be risking more than 3% personally per trade. I think 3% is even fairly high. I think the only way you'd want to maybe risk 3% is if you're only looking to, say, take one trade, and then if it's a loss, you move on. I think that could be more beneficial, but you don't want to see two losses in a session. That means you'll be down 6%. It's quite heavy. It's going to hurt your psychology. So I don't know. So in terms of risk management, you want to know what you want to risk, or you want to have a specific figure amount. So if you've got, say, a £500 account, if you want to risk, say, £50, £25, you need to know the risk that you want to risk, and then you need to go for lot size that way. And then obviously with your stop loss. And then the other thing you need to work out is, what's your trading rules? Because, for example, my trading rule is I will take a trade, and if it doesn't work out, if I get the same confirmation or even a stronger confirmation, then I will look to give my trade a second chance. That there's a potential that I was just unlucky, or early. Ooh. So at that point, I'd be looking to maybe take a second entry. But by the second, if it doesn't work out, I don't want to be looking to take a third trade, because at that point it gets very tricky. So I think, yeah. So if you've got all of those in place, and pretty much that means that if you're losing, you're just over trading, or it means that you haven't back tested enough because it's not working, or it means that you're not really adapting to market conditions. You're trading in some heavy ranges, and you're not identifying when's the best time to trade and not to trade. So there's definitely something going wrong. but for the most part, people lose money based on FOMO, over trading, over risking. Okay. You know, the thing is the first book I ever wrote, it said in that the two ways you're going to lose money is over trading and over risking. That's in a Currency for Dummies book, was the first book I ever read on Forex. And that book had sold thousands of copies. I mean, hundreds of thousands of copies, probably millions of copies. Yet not many people are profitable. So it does say something about human behavior. So there is this thing that people just can't help wanting to do these things. So you really need to detach yourself from the money aspect. Just focus on the trading, make it a passion, make it a hobby, and then the whole process is going to be a lot better. And I think that's the point where you'll actually, you know, start to be profitable. So yeah, so in terms of trading psychology, I think for the minute we're gonna leave that video there. So the new other videos, the other videos about trading psychology, we're gonna go through pretty much same sort of thing, just more in depth. Maybe talking about a bit more my personal journey, what I went through. So definitely gonna go over this a lot, because this is probably the hardest aspect of trading to overcome. And then, of course, I'm going to go through how to back test, how to create a trading plan. So these are the next videos coming up. I'm going to do them, and then I'm going to get back to actually on the chart work, and then we can start strengthening up your skills. Okay, so that's it from me, and I'll see you at the next video.